Welcome to Digital Asset News. My name is Rob, and usually we don't do a live stream during the week, but I thought today we mix it up a little bit, especially with what's going on in the market. What I'm talking about is if you don't check your portfolio 20 times a day, you might not have noticed that there was a little bit of a pullback. Now, I'm going to be very careful in what I say and how I say it. I don't want to say it's a crash. I don't want to say it's a dip. We can just call it a pullback. Whatever you want to call it, we're in the red today. Bitcoin's down, Ethereum is down, everything's down, in the last 24 hours. And some are down, precipitously. We have some pretty big, not like Filecoin's down 6%. Ooh, Aptos 7%. Over the week, it's looking even worse. 20% for Filecoin. Holy smokes. 14% for Shiba Inu and so on and so forth. So the big question is why? Why is this going on? And we can make guesstimations. We can check to see what's happening. But in all honesty, there are things that could lead us to why this is happening. But in all honesty, sometimes I just think it's just whales who just use this as an excuse to take some profits and then just move about their business. But if you have to look at one thing, I suppose this is something we talked about yesterday. This was a video we did. It was a very short video yesterday. It was about 8 minutes long. We talked about how Coinbase had come out and said, look, your funds are safe, but we got this problem with Silvergate. And Silvergate is this bank that is being used by a lot of the centralized exchanges, mostly for custody accounts and things like that. And it looks like they're becoming insolvent. And the reason why they're coming insolvent is because of their association with FTX. Again, I never thought contagion would just stop with all the little things that were going on a couple of months ago. I always thought there'd be more contagion as time goes on, and that's what's happening. So again, we covered this yesterday, but this is a recap. This just came out yesterday as well, later in the night. But it says crypto industry distanced itself from Silvergate as bank collapses. And taking a look at this, you might just be like, well, is this really that awful? Depends on who you're asking. But as far as like the players that are involved, you got Coinbase, Paxos, Galaxy, Gemini, Bitstamp, Crypto.com, and Circle. Each issued statement saying they have cut ties with Silvergate. And this is another concern. MicroStrategy, I guess they have a somewhat, I don't know how big of a loan it is, but they've addressed concerns for its Silvergate loan in the event the bank faces insolvency. So MicroStrategy is involved. Again, contagion. It just kind of spreads its ugly tentacles and attracts to everybody. And here's one of the reasons why, or one of the things that are going on that people may make this assumption. Silvergate gave notice late Wednesday night, after the stock market had closed, of course, that it won't meet a March 16th extension to file its annual report and cast doubt on its ability to continue as a going concern over the next 12 months. Basically, what it's saying is like, look, we thought we had it and we thought we're going to make it, but probably not. So if you can't come out with your annual report on time, especially if you're a publicly traded company, you got problems. And that, I think, could lend its way into the crypto market like we've just seen. And what happens? Well, when there's that much uncertainty, what happens? People panic, or whales sell, and they use this as a prime reason. Just go, oh yeah, it's something else. This is the reason. But when the price goes down, you got to see a lot of liquidations, and unfortunately, shorts got wrecked not too long ago. You could see over here. Wow. In January 13th, you had almost $500 million of shorts were wrecked. And now it's the longs that get to play that game. And they had around 210 million of the longs were liquidated in a very short amount of time, and people just get wiped away. That's why I'm not a big fan of that type of trading. I don't really trade too much, but if that's for you, that's all you. I'm not that guy. And when we take a look at this, the question then becomes, well, how long is this going to go on? Who knows? Me personally, I got to tell you, I'm actually kind of ecstatic this is happening, because I've been dollar cost averaging. I switched over from micro DCA to full dollar cost averaging. And when I see these types of days, I'm like, whew, thank goodness, because hopefully we can go down and I can start to accumulate at cheaper prices. And that also leads me to this, which is the question then becomes is like, well, how long? And this is Ben's time and risk bands. And I like to take a look at this just to remind myself of just when the times are that we are in some time frames of when it gets risky. Because you would think like today we'd be, more of a risk level because we're down 4%, almost 7% in the 7-day time frame. But if you take a look at time and risk bands, and again, this is just the percentage of time that we're in like a precarious position. Right now, Bitcoin is currently in the 0.3 to 0.4 risk band. That's this. 25% of the time, this is where it's at. So I know when people say, there's a little bit of a pullback and this is, being bad and this is awful. In all honesty, we're in the same boring range that we've been. Me personally, when I take a look at this, I'm looking for risk band time frames like this, 0.1 to 0.2 or even 0.0 to 0.1. Only 3% of the time in Bitcoin's existence has it been in this risk band. Also, if I really want to drill it down, and this is when I want to actually buy, when it starts to get down to these ranges, I start to increase my dollar cost averaging, dynamic DCA. And when it goes over here, when you're in the 0.7, when it gets super risky, that's when I think about selling. It's not rocket science. I mean, just one of those indicators to take a look at. So again, that's potentially the reason of why we are seeing this little bit of a sell-off, a pullback, whatever you want to call it. And to me, it's just a Friday, quite honestly. So let me know what you think about that in the comments section. That's the reason. I think some people will flip out, and some people who have been here for quite some time. If you're here, you've probably been here for quite some time, so not a big deal. And let me know what you think about that in the comments section. And then let's finish up with a couple of good news. Well, good points, I would say. First of all, Sweatcoin. I talk about this a lot because I'm biased and I own a lot of it. So I was kind of surprised because Sweatcoin's it's a move to earn platform. And we did a deep dive over on the secondary channel at Dan Degen. You can check it out. It's for the more risky plays, but I didn't think it was going to happen. But the Sweatcoin app, which is, depending on where you look at it, it's either number 1 or number 5 of all of the lifestyle and fitness apps. It's the number 1 or number 5. It's like 200 million plus downloads. And it went to Web3, and within 2 months, it had 20 million wallet downloads for the crypto wallet itself, because I think it's a good product. But they avoided the US for obvious reasons, Gary Gensler and the SEC, and they just put this out yesterday. On September 12th, Sweat and Sweat Wallet will be available to US users. What does that mean? This marks the 1-year anniversary. On this date, U.S. residents, which on this show, I am one of those. You probably are in my Steps Challenge. And what it means is that the sweat coins that you accumulated, which were just coins, were just tokens, you couldn't do squat with them. You could buy like little things on the app. On September 12th, you're going to be able to use those coins to sell them for whatever other crypto, or if you want to get into fiat, you can do that on September 12th. On this date, U.S. residents will be able to use the Sweat wallet to receive their allocation of Sweat in proportion to their current Sweatcoin holdings and start earning more tokens for their steps right away. So again, I'm kind of shocked that this is actually going through, and I'll have the Sweatcoin team on. I think that's a good news, and maybe they know something we don't as far as regulatory issues. And then speaking of regulatory issues, Voyager. Just real quick, I don't know what the SEC is doing, and we're going to talk about a story real quick about how the SEC chair, Gary, thinks that all the crypto exchanges are unqualified custodians. But this was what happened yesterday. Voyager, if you don't remember, went into bankruptcy, and then they were going to get bought up by FTX. FTX collapsed, and now Binance US is trying to do the deal, which would give the people 70% back of what they had on the platform. And now, out of nowhere, the SEC shows up at the hearing, one of their lawyers, and says, hey, this can't go through because we think that VGX token is a security. That's what happened. So this is what it is. Voyager bankruptcy judge says he's absolutely shocked by SEC objection to the Binance US deal. So what they're saying is, like, if you have Voyager, and I don't care if you have it or not. I mean, if you think about this, imagine the SEC coming and going, hey, it's great that you're trying to make everybody whole, at least 70%, but we don't want you to do that. Here's what's happening. U.S. Bankruptcy Court Judge Michael Wiles appeared skeptical attempt by the SEC to stop a purchase by Binance US. The securities regulator said the $1 billion deal should be blocked because Voyager's token could constitute an unregistered security. And this is what the judge said to the SEC counsel. He goes, you're going to come here and you're going to tell me that I should stop everybody in their tracks because you might, not that they have an issue, but you might have an issue. And he states, this is verbatim, it's kind of a weird objection. He said he was absolutely shocked, saying it was asking Voyager to prove a negative, meaning they have to prove that it's a security, with little guidance from the regulator. Judge says, I got the feeling this objection has been made as kind of a cover, so you can say we raised the issues. You haven't really done anything. I need to know the specifics. So the SEC counsel, William Updegrove, said that creditors had not been sufficiently warned of regulatory risks, but declined to take a definitive position on whether VGX was a security. So again, they're trying to stop this because they think, hey, wait, this is a security. You can't do this. Amazing how the SEC operates, but they give no guidance. And on a side note, a little entertainment here for you. This is from VGX Heroes, and there was a creditor. He was at this hearing yesterday, at No Limit Alski. And you can follow him at No Limit Alski. And he got ejected and barred from further proceedings after he stood up and he called Judge Wiles a fraud. And all the lawyers were criminals robbing creditors in plain sight. Now, that's the toned down version. I can't tell you exactly what he said, but this person just stood up in court and was like, you guys are crooks. You're a piece of data. And I can't believe this blah, blah, blah is going on. And of course, and he got ejected. I just thought it was fascinating that people will go to these limits, because I can understand everybody's got their limits. I'm reaching mine, but I got to tell you, I followed him just for that. So let me know what you think about that in the comments. I think it's interesting, the SEC, and people are losing their patience, which I can totally understand. And then lastly, SEC again. And I thought this one was interesting, and the reason why is because maybe Gary's right in this one. I know this is hard to think, but listen to this. So the SEC chair implies that crypto exchanges may not be qualified custodians as a new rule is drafted. And really it comes down to this. This is the stuff you're going to see. The roundtable show. I don't know who they are, but sure. And this is the title. U.S. SEC Chief Chair Gary Gensler says crypto exchanges are not qualified custodians for investors' assets, saying they can't be relied upon and must be highly scrutinized. Calls for Congress to grant changes to custody rule. If you read it just like that, you're like, that's SOB. I can't believe he said it. I get it, because when I read that, I'm like, well, here goes Gary, which is what we just talked about in the last one. However, this is what he wants. He states, just because a crypto trading platform claims to be a qualified custodian doesn't mean that it is. When these platforms fail, FTX, Celsius, Voyager, BlockFi, investors' assets often become property of the failed company and are prone to clawbacks, leaving investors in the line of the bankruptcy court. And here's what he wants: to be a qualified custodian. Just to be a qualified custodian. On this new rule, a firm would need to ensure that all assets are properly segregated, meaning not commingled. Does that make sense to you? Is that reasonable? You have to submit to annual audits from public accountants, like things we've been talking about. Merkle Tree audits, and which is open to the public, and also proof of reserves and proof of liabilities, and undertake other transparency measures. I don't know what that means, because they didn't really go into details, but let me ask you a question real quick. Let's just say, for example, Brian Armstrong and CZ Binance come out and they say, you know what we want to do, guys? We want to make this more transparent because we know there's been some problems. And what we're going to do is we're going to update our terms of service, and it's going to specifically say that we're going to ensure that all assets are properly segregated. And we're going to make it very simple for you to see. Also, we're going to submit to annual audits from public accountants. And we're going to let you guys see that. We can do the Merkle Tree, proof of reserves, proof of liabilities, but also we're going to add another layer as outside third-party accountants are going to come in and they're going to do their audit. And also, we're going to do some other transparency measures to make sure that you feel comfortable with what we're doing, to make sure that the junk that happened with the FTX, Celsius, and Voyagers will not happen again. Would that be okay with you? If Brian Armstrong and CZ Binance came out did a joint press conference and said that. Now flip that around. And now it's Gary Gensler that said that. The question then is, and the last question I'll say is this, is it just a narrative or are some of these things right? I don't know. Let me know what you think about that in the comments, but that is it for today. So look, we did pretty good. 15 minutes on a live stream. Didn't ramble too much, and that is it for today. So look, we'll do the Q&A. I'll answer all your questions. I know that was everybody's favorite part. I can totally get with you on that. Also, if you're in the Puerto Rico area on Sunday, we're going to do a meetup. We walk shelter dogs at Amigos de los Animales. Follow me on Twitter, and we do that every Sunday morning, 8 a.m. Walk them on the boardwalk on the beach. Something good to do. We talk crypto. I treat everybody to breakfast afterwards, and that's it. So look, if you like today's video, thumbs up, subscribe, all that good stuff. Now let's get into the fun times, which is Q&A. All right, let's do this. So let's see.